Owen Cornelissen is chief economist at Robeco Asset Management, which looks after 150 billion euros worth of assets, and he joins us now in the studio. Good of you to join us. Inevitable, but will it happen soon?
Yeah, that's the question. The Greek government has come up, they are behind schedule, of course. But now they have come up with some asset sales they are at the end going to do. They've come up with some extra austerity measures, and so they hope that Europe will give a second tranche.
Is there a tipping point? Because every day we see him on this programme, we're talking at the bond yields and we're talking about Greek bonds creeping up. Is there come a point where it will people will say, you know what, that is the tipping point, that's where we just throw in the towel?
The yields do not matter too much, because the Greek government doesn't have to go to the market to raise their cash. So, but of course it's a vote of no confidence by the markets, and that in the end that we will have to restructure. But the actual level doesn't matter too much at the moment. That's just, you could say it's a sentiment.
Well, it doesn't happen too much, but if you look at the 2-year, 25.6%, at some point we're seeing a lot of politicians in Europe already saying, guys, we're paying so much for Greece and other countries. When will be the tipping point where actually we're going to see a breakup of the Eurozone?
Yeah, well, a break of the Eurozone, that's a bit
But if we have a
large.
default, is a breakup inevitable?
No, a break-off is not inevitable. It will be a default within the euro area. But it's highly likely that at some point of time in the future the Greek train will derail. And perhaps current strategy was to postpone the day of reckoning to 2013, when we have the successor to the EFSF ready and so on, and the banks are in a better shape. But it doesn't seem like we get this much time. And there is fatigue, of course, in Greece. Opposition is also protesting against the asset sales, so there's no political consensus. Yeah. So the Greek government is really struggling at the moment, and there could be fatigue that the Greek government decides to throw in the towel. Another event that could happen is that Europe will throw the towel in and says,
and that's a big concern.
Greece will not make it, and we have to face the consequences.
You mentioned the banks there. Don't necessarily need to go into any particular names. What sort of banks are most at risk if that contagion spreads?
I think if the Greek government would default, that would mean they have to nationalize all the banks. So you will end up with a Greek banking crisis. With some, and they have of course some exposure to the rest of Europe.
I was going to say that exposure. Where else in Europe? Because all these banks are holding so much debt.
There's important exposure in France and in Germany, and if that would mean that capital ratios would get too low, then of course European governments will put in capital.
And more
to contain the crisis.
Leon, let me ask you this. By the end of the year, are we going to see a default? And is that default going to trigger a complete panic on all of the banks in Europe?
Well, if it's a panic, that's difficult to say, because in one way, the markets are already anticipating a restructuring in Greece. But I think it's likely that before the end of the year, we will see a default in Greece. And of course, the markets immediately will say, well, then we will get a default in Ireland later on. And Portugal as well. And Spain is, of course, is a big question mark.
OK, Leon Cornelissen, thank you very much indeed. We have to leave it there, but thanks for coming in and bringing us your views today here on Counter.